Well, accounting for joint ventures. I was saying a joint venture is a group of companies, or when two or more companies or organizations comes together to promote a common interest. Could be to pursue a tender, let's say to complete some work. A good example will be a construction of a building. In a building, we have different companies that might be involved. Could have the company that is handling the masonry, or the one that is handling the building, the structuring, metals and the stones. Then you could be having plumbers, or a company that is dealing with plumbing items, toilets, sanitary ware, etc. We could be having another company that will be in charge of doing the electrical installations, that is power cabling and ensuring that the power is there. So when these companies come together, we call them a joint venture. They are abbreviated as a JV. So a joint venture is usually a temporary partnership towards promoting a common interest. So these people will come up together. They are not a limited company, or they are not going to register any name. They'll just operate independently, but towards a common interest. After they do that, they share their profit and everyone goes home happy. So it's like a special purpose vehicle. If, for instance, you've been given a tender to, let's say, construct a road, you know there are different professionals that might be used. We need the quantity surveyors who will be reading the maps. We need the civil engineers. We need those people who will be doing the drainage, etc. When they come together, the three companies, they'll deliver the road. So they'll be paid, let's say the tender was worth 1 billion. The total construction cost is 850 million. So if they were to share their profit equally, 1 billion minus 850 M, they have a profit of 150 million. Each takes home 50 million. So a joint venture is that special purpose vehicle where different organizations or company will come together. They enter into the adventure concern, contribute to the capital, and capital could be resources or the professional expertise, and then share the profit or losses. So a joint venture, even people, if you go to places like Komba, and those people are importing mtumba. Of course, buying mtumba alone, if you are to ship one container, let's say 40 feet, might be a tall order, isn't it? So several hawkers will come together, or those people who deal in bales. They'll contribute towards the capital of importing the mtumba. Then they'll also they will identify, or through the networks, they'll go and buy the materials, they'll ship in and then share. That's another example of a joint venture. So you can see the adventure here is importing the mtumba. Once we get the consignment, we share, and everyone does their business of now selling the mtumba. Or we come together, we commingle our capital, we advance and get the tender, pursue the work, share the profit or share the losses, not always profit. So that's a JV. Now, you said a JV is a temporary partnership or syndicate. We come together with a common interest, that of making profit. Then the partnership is for a specific venture. In other words, we are saying it is timelined. If, for example, the work is supposed to be delivered in 1 year, we are going to sign a joint venture agreement for only 1 year. Once you deliver the joint venture, we break up. So the partnership is without the use of a firm name. So we'll continue operating with our names. ABC Limited, XYZ Limited, PQR Limited, we come together. We are joint ventures. So it will be a joint venture between ABC Limited and, let's say, XYZ Limited. That's how they'll call themselves. So the purpose here is to make profit. After we make the profit and redistribute, we collapse the JV. So there are different methods of keeping the books of a JV, and that is what brought us here. So when a JV transact, they may record the transactions in what we call the memorandum joint venture account. A memorandum joint venture. Memorandum is from the word memo. When you're talking of memorandum, is a brief note for the memory. So they are going to document somewhere. Not necessarily. This is not the usual double entry system. No. What they'll do, they'll bring together all the costs that were involved, who gave money, who contributed what towards the venture that they are involving themselves in, and then they are going to net off. As simple as these are the costs, this is what we have contributed. They net off, and whatever remains is the profit. So every company that will be involved will maintain that memorandum joint venture where all the transactions will be kept. Not necessarily, they can even appoint. You can see the scenario too. One of the co-venturers can be appointed to manage the joint venture. So in this case, it is that co-venturer. Now, those people who are involved, the company A, B, C, and XYZ, they are called co-venturers. So they can appoint one of the company to retain the books. Then 3, we have separate set of books, and they are not maintained for recording joint venture transaction. We'll not even cover that. And then the 4th one, where a separate set of books are kept for the joint venture. Our interest will be in the first 2. So let's go on. So in a situation where a memorandum joint venture account is used, each venturer will open an account in his own books. So we are going to have, I am ABC Limited. So my books will be reading joint venture with XYZ Limited. Now the XYZ Limited books will be reading joint venture with ABC Limited. So you identify your books with the names of the other co-venturers. So in this account, the venturer will only record all the transactions that they have undertaken pertaining that joint venture. So they will not record in the yearbooks any entries that were performed by the other co-venturers. So this is the entry. So when the venturer incurs a liability, of course, this will tend to reduce the cash, right? So we are going to debit the joint venture, credit the cash or the creditors, depending on the mode of payment. If you are paying by cash, credit cash. If you are paying in future, there is an obligation, there is a liability there called creditors. So when the venturer makes sales, of course, our cash will increase. So you're going to debit the cash or the debtors, then credit the JV. When the goods are supplied out of the venturer's own stock, because in some situation, for instance, if let's say you are the person who is offering the plumbing works and you have a hardware that supplies plumbing materials, why will you go to buy plumbing materials from elsewhere? You'll buy from your shop, isn't it? You want to promote your business. So in that case, we expect you to debit the JV, credit the purchases. And of course, if there are any sales and they are attracting commissions, you debit the JV, you credit the commission. What I'm trying to say is the conventions of financial accounting one stays. Where the cash increases, of course, you debit. Where the assets are increasing, we debit. Where the liability is increasing, we credit, right? Where we are incurring any sales, we credit. If it is a purchase, we debit. Those conventions of FA remains. So each venturer then sends to all other co-venturers the summarized statement. So I've said this is a composite book. It just relates to the transactions that were held, not necessarily a double entry kind of a system. So each venturer will send to the other co-venturers a summarized statement of the transactions that were passed through the JV, including, if it is appropriate, the valuation of stock that were held as a given date. Now, without so many stories, I'll just have an example and see. So in that case, if this is the case, each party will build, this is what I was calling a composite memorandum. When you talk of composite, relating to, so all the transactions that are related to, that's what we mean by a composite. So your JV or the memorandum joint venture will be composed of the several elements. And this is outside the double entry system. So you're just doing the entry. Whatever is bringing money, we debit. Whatever is reducing money, we credit. It's as simple as that. Then at the end of the day, when the profits have been divided, assuming there was a profit, you are going to debit the JV and credit the profit and loss account. So the joint venture accounts are now balanced. And if there are no errors, then the final balances of each person should be equal and opposite. It's a self-balancing account. You'll have an example and see. I have an example. They have shared this illustration in the portal. Would appreciate if you open the portal. On my end, I'll be working from the Excel. So you're going to lose this screen. So you've been told Peter and Paul entered into a JV effective from 1st January 2016 to repair television sets and audio equipment. It was agreed that Peter would secure orders. You can see the mandate of each co-venturer. Peter would secure orders, collect the items from the customers, transport them to Paul. Now, Paul would then carry out the repair work and deliver them back to the customers and collect cash. Now, in the JV agreement, in the joint venture agreement, the roles are shared. What each JV or each co-venturer will be doing. For example, if you are doing plumbing works, we don't expect you to build stones, isn't it? So building stones will be for the masonry. We also don't expect you, if you are doing plumbing works, we don't expect you to do the electrical wiring. But remember, you are working in the same building. Now, does it mean that because you are not working as an electrician, you go cutting the pipes, all the provisions that the electrical installer has done? No. Of course, you have to respect each other's space. And that's why in the agreement, you'll have the roles or the duties that each of the co-venturer will be playing. So each party was to charge his expenses against the JV, and profit and losses were to be shared. So Peter is taking 2/5, Paul is taking 3/5. Settlement to be made quarterly, after every 3 months. In arriving at the profit or loss, work in progress was to be disregarded. So anything that is incomplete will not be considered. it will be pushed to the subsequent quarter. So during the first quarter of 2016, Peter assisted in financing Paul by sending him a check of 600. Paul bought stock of spares, components, and other materials for 700, of which 400 shillings were still in stock as of 31st March 2016. Peter placed advertisement in the local paper, a cost of 100. Customers, and collected cash from customers amounting to 49. Wages paid to part-time staff, Paul total to 1950 and Peter 550 shillings. And then an allowance was made to Peter of 500 for vehicle running expenses and 200 to each party for use of the general services. Prepare the joint venture accounts in the books of each venture, together with the memorandum joint account for the quarter ended 31st March. Have you opened the books on your end? Have you opened the portal?
Yes.
Yes.
Well,
Yes.
stop sharing this. It's okay. Open an Excel. So we've been asked to prepare each co-venturer's books and then the memorandum JV. And you see that these books they are composite, so they don't have any. So this is how you do the books. We have two co-venturers. I have Paul and I have Peter, right? So you can start with the books of Peter. So we are going to say joint venture with Paul. So you see these are books of Peter. Now the books of Paul, we read joint venture. Unable to copy paste. Don't know what's happening. Copy. So in the books of these are the books of Peter. So in the books of Paul, I'll be having joint venture with Peter. So we said you are joint venturing with the other co-venturer. And then of course you are going to have the memorandum. So this is the memorandum joint venture. Let me just write JV account. So you'll be recording the transaction as they occur. Give me the first transaction. What's the first transaction? I want to read me the first transaction. Can I get someone to lead us the first transaction? Are you seeing my screen?
Peter assisted Paul in financing Paul by sending him a check of 600.
So we have Peter assisted Paul, right?
Yes.
So we are going to have in the books of Paul, we should see that assistance. Also in the book of Peter, we should see that money being received by Peter, isn't it? So I'm going to have, read again. I want to know who is being debited.
Peter assisted
Paul.
in financing. Peter assisted in financing Paul by sending him a check of 600.
Student always confuse this side. So we are going to have check to Paul, isn't it? Of 600.
Yes.
Then in the book of Peter, we are supposed to check to have we have to see the bank, the check that is coming from Paul. So check from Paul. The amount is 600, right? We go on. The second one.
Paul bought a stock of spares, components, and other materials for shillings 700, of which shillings 400 worth were still in stock at 31st March 2016.
So that is Paul who is buying, isn't it? So in the books
Yes.
of Paul, these are the books of Paul with Peter. We need to see the spares. What else did he buy? Spares?
Spares, components, and other materials for shillings 700.
Just say spares, components, etc. We've been told another materials, eh?
Yeah.
Good to indicate that this transaction is taking place through the bank. We haven't been told it's cash. So what amount?
700.
700. So you can
of
see
which
this.
400.
Of which?
400 was still in stock at that 1st March 2016.
So we have stock. 400 was still stock. Out of the 700, 400 was stock. Let me go back to the question. Let me check. Paul bought
Excuse
a
me,
stock
sir.
of.
The first transaction is check to Peter.
Yes.
It was check to Peter.
Peter assisted in assisting Paul by sending him a check. What's the challenge with that?
It is okay.
Now you are saying it's okay. You had said something, then you are saying it's okay.
I've seen.
So it's okay now. You know, the first book is the books of Peter, right? So he did a check to Paul of 600. And in the books of Paul, what we have indicated JV with Peter, we can see that check from Peter being received of 600, isn't it? I mean, the second transaction, Paul bought a stock of spares, component, and other materials, 700, of which 400. So this will be closed in stock. So don't forget that will be closed in stock. Let me get back. I can even indicate it here. This should be our closing stock. So let me just write it, stock, carry downward. It's not closing stock per se. We are not closing the year. It's being pushed to the next quarter, isn't it? Because it is ending on 31st. You realize that. So in these pairs and components, let us just do the two books. Then we'll just go to the memorandum. Alternatively, we can do the memorandum and then come to the individual books. Can start with the memorandum JV. I've said these are composite books. I can just copy paste this. The amount is 700. So for the second one, we have said that we have a closing stock. We have the spares. And out of this 700, we have closing stock, right? Closing stock, I'll want to write it down there. Even, let me just write it here not to forget. So closing stock. Read me the word the third entry. So these are 400. Third entry.
Peter placed advertisements in the local papers at a cost of shillings 100 and collected from customers amounting to shillings 4,900.
So we have advertisement. What amount?
100.
100.
Yes.
And then?
And corrected cash from customers amounting to 4,000.
Yeah, we have collected cash. So we are going to debit the debtors or the cash, credit the memorandum JV, isn't it? Let's assume this amount is being paid to the bank. You say the amount is 4,000?
900.
900.
Yes.
That was Peter. Was that Peter or Paul?
Peter.
Peter. So I'll go in the books of Peter. Advertising. 100. We go on.
Wages paid to part-time staff by Paul totaled shillings 1,150 and by Peter shillings 550.
So we have wages. In the composite, we can combine them. You said 15? 1,500.
1550. No, it is not 15, but 1950.
1950.
Yes.
The other one?
550.
550.
Yes.
550, 1950. This 25. So in the individual groups, we are going now to split them. So in the books of Paul, the wages will be, Paul is 550, isn't it? Is it? Confirm? Then wages for Peter is 1950.
Paul is 1950. Peter is 550.
So this is 550. This is 1950. We go on.
An allowance was made to Peter, shillings 500 for vehicle running expenses and shillings 200 to each party for use of their general service.
So we are starting with vehicle running allowance.
Expenses.
What amount?
500 and shillings 200 to each party for use of their general service.
So general expenses.
200.
So the year 2, isn't it?
Yeah.
200 each. So it will be 200 plus 200, right? Total to 400. So that we now split them. So for Peter, who is getting the motor vehicle allowance? It is Paul. Paul or Peter? The vehicle expenses was for Peter, right?
Yes.
So let me copy this. Only that this will now be 200, not 400. The vehicle running expense was 500. I'll copy this. So in the books of Paul, I'll also reflect the 200 because each is getting a general expense allowance of 200, isn't it? Anything else? Is that all?
Yes. Required to prepare the joint venture account in the books of each venture together with the memorandum joint account.
Yeah, so we have prepared the books. All that we need to do is now to balance. Now you start by balancing the memorandum JV to know whether it was a profit or a loss. Kindly mute yourself. So from the look of this side is the one that is balancing. So that will be 5.3. What's the total on this side? Give me the total. And to know where the balance is. If it's a credit balance, it will be a loss. If it's a debit balance, it will be a profit.
4,110.
What are we getting?
4,110.
So the balance is on this side. What's the difference?
1,109.
1,000?
109.
190.
Yes.
1190. That way.
Yes.
I can indicate here. These are profit actually, not a balance. So profit that will be carried downward for sharing. So I want to put it down here so that we can share. So this is the profit. Go downward. What is the ratio of sharing?
Uh, 2:3.
No, I'm wondering where we are getting 90 and I don't have a 1 anywhere. Where are we getting the 90 from? All these are zeros.
It is 4,200.
So what is the difference?
1,100.
1,100.
Yes.
Don't know where he got that. So I have the profit is 1,100. So this is a profit that need to be shared amongst the two co-venturers. We had been given the ratio. What was the ratio? The ratio was 2/5 over 2/5 and 3/5, isn't it?
Yes.
So can we share the profits? So profit share, if you remember partnership accounts in your financial accounting too. So we start with Peter. Peter is getting 2/5.
Yes.
What is 2/5 of 1,100?
Okay. 440.
440. 440. Then 3/5? 660.
660.
660. Close the books at 1,100. So you can see essentially the work of the memorandum JV is to share the profit. Let me format paint that. So there we are. Now you've gotten the profit. We had a closing stock here. Good to reflect that we have a closing stock. So this will be the stock that will be opening the period. So the stock that is brought downward is 400. I think we are now ready for quarter two. We need now to close the books of the different co-venturers. We start with Peter. So what we haven't put here is the profit. You can balance the books before you go to the profit to know the kind of expenditures that these people are incurring. Which side? Is 2850. So 2850. So I have a balance on this side. So this will help you now to know what amount they'll be paying to each other. What's the difference? 1850.
Yes.
So there we are. So I have a balance brought downward of 1850. Then what was his profit?
$660.
660. So profit. You add the two, 2510. So this is the amount that they are supposed to give to Peter. So balance carry downward, 2550, 2510. Let us balance first to see whether we'll balance. Before I close that book, let me first balance the Paul's books.
Sir, this one are the Paul's books. The one that you are doing.
Yeah, these are the Paul's book. Go to Peter. Yeah, let us balance Peter's. This is 1950. Who collected the cash? There is some amount that we collected. Was it Peter or Paul? Who collected? Confirm? How could Peter be having?
Peter corrected the cash.
Yeah, I can see. Collected cash from customers amounting to 49. So I should reflect that. So we expect in Peter's bank account, there is cash collected of 49. That I can now balance the books, 1950, 49. What's the balance? 49 minus 1950. What's the balance? $49 minus 1950.
2950.
2950. So this is the balance. Let me close the books first. 29.50. Then from that, we have the profit share. Paul got 400.
And 40.
440.
Yes.
So the balance carried downward. They are reconciling, isn't it? That's why I was saying these books are supposed to be self-reconciling at 20 minus will be 2510, isn't it? So this is the figure we were looking for. So we can now write comfortably that Peter will do a check, that Paul will do a check to Peter, to bank, check to Peter of 2510 for the account to balance. So here we expect that again, we are going to reflect in the bank a check to Paul of 2510.